Well, welcome to what we think might be the first of many quote unquote fireside chats with the Artisan Capital advisor team. We thought today, given all that's going on in the economy and the global stage, that it might be appropriate for us to have just a impromptu conversation between the three of us that we share with clients, and uh, just a chance to share our thoughts about what's happening and to share with you a little bit about what we're doing in response. So I think the elephant in the room is clear. There's a front runner, and that's tariffs. And so I guess we'll start there, and maybe AJ or Christopher wants to jump in and kind of summarize what you've seen, and we'll go from there.
Yeah, I think what sticks out the most is a little bit of a shock, right? I know when part of the platform that Trump ran on was to kind of create some fairness across international trade. And I think most people from what we've been hearing and reading, a lot of economists agree that the discrepancy in trade was an issue and that attempts to kind of bring that into balance, that idea it warrants an A or a B plus, as far as many economists believe. However, what we saw with the rollout, I think a lot of people are giving that grade an F, right? And so what that has done is created a lot of volatility. Maybe a little bit more than even we were expecting, right? Going back to the fall, we told a lot of you all that expect volatility, right? There was the Trump bump after he got elected, and we said, well, hold on, he's still got to get in office and start pushing things, right? And so, with a lot of this, we expected a certain level of volatility, but I think with that uncertainty, it's created a lot more volatility than we necessarily anticipated. And with that being said, I think what we also see is there has been a lot of volatility. It's been bumping all over the place, but we've saw a very steep drop followed by a record-breaking day in the market, right? And it's just there's not a whole lot of direction with the market right now.
Yeah. Yeah, and I think, one of the things that is definitely complicating issues, as our clients have been hearing from us for the last couple of years, that the Fed and interest rates has definitely been, a point of concern for us. And how do we properly manage that from a fixed income, the fixed income side of your portfolios? And the tariff situation certainly is going to produce an inflationary effect. We don't know if that's going to be a short term or a longer term thing. Um, and that's definitely making the job of the Fed a little, more complex. And so the public struggle, between President Trump and Jerome Powell, displayed in social media has for everyone to see. I think Fed independence is important, and I think what the Fed's moves are next will be certainly determined in part by what happens with where tariffs end up. And, I think the big concern that I've been reading about is, the stagflation effect, where you have, negative GDP growth and you have inflation. And so while the Fed's chance of a soft landing, was at pretty high odds months ago, at this point, I think what we've been seeing is kind of a 50-50. And we'll see what happens with rates. I think the expectation is that the next rate cut possibility would be June. And the Fed has consistently said, and the Fed being Jay Powell, that they have not changed their long-term rate targets. So even given what's happened, the rate targets for the end of 25 have not changed. end of 26 has not changed. I listened to the Chicago Economic Club of Chicago meeting was broadcast, and I listened to Powell's comments and some of the question and answer. And I think he's done a really good job of managing all of that. But we'll see. We'll see what happens. And ultimately, I think this comes down to for us, a lot of conversations been happening about what do we do? What do we do with our strategies? What do we do with client portfolios? So maybe Christopher, do you want to just kind of summarize maybe the top 3 points, that are coming out of, this latest round of portfolio evaluation and what we're going to be doing this week with starting rebalancing?
Yeah, absolutely. So, one thing that many of our clients have heard all three of us say in meetings is we are here to control what we can control. And there's certainly a lot of unknowns in what AJ and Anthony just described. So, touching on the key points that we're adjusting or emphasizing with these strategy changes, we are expanding our developed international position slightly. We find a lot of value with that right now relative to domestic markets. And we are adding a defensive position in consumer staples, which is a position we used a couple years ago, and it served well in that time. And in the last couple years of good fortune, it wasn't necessarily a part of our portfolio at that point. So bringing that back into the fold, emphasizing maintaining our utilities position in our tactical sleeve to continue to maintain that defensive tilt and value tilt, and then continuing to work through our risk mitigation sleeve as well, and having lots of conversations about how we can maximize minimizing the volatility for client portfolios where it's possible. So those are a couple of the key changes that we are looking to make in the coming round of rebalancing. And we will continue to pay attention to try to see where the trends are going to be going as new information becomes available.
Yeah, I
Yeah,
think the most difficult part with all of this is, the situation that we're in right now, the closest corollary is COVID, right? Supply chain issue, right? And that's what is going to be created with tariffs is how are goods moving around the world in this new tariff world, right? And we're already starting to see it get implemented with like Temu having a tariff surcharge. There's a lot that needs to get settled out. But unlike COVID, where things were shut down because of, a natural event, this was created with a 15-minute press conference, on the front lawn of the White House. So in that same vein, this can go away with a tweet. And so this is the difficulty that we're faced with. And I think the reality of it when we step back from the situation is, these tariffs were proposed, and if we know something about Trump, he goes in a little strong. And so, I would say that what the expectation is, and we've already seen him backtrack a little bit off of it with the pause, and that certainly helped markets recover. Um, but in all likelihood, it's not going to be as bad as first proposed or as high as first proposed, but it's likely not going to be nothing, right? And so I think our challenge in that is, where do things land? And that's going to come through, we'll get clarity with time, right?
yeah.
And
Let's
as
let's think
countries
about
start coming to the negotiating table, right?
yeah.
And there's going to be a negotiation. So it'll play out somewhere in the middle. And I think for us, when we look back, we take a step back and we look where clients are year over year. I think a lot of people we've talked to recently have been surprised that, oh, you're actually up year over year, right?
Right.
And so we have this when we get too focused on the short term. It's helpful for us to increase that refractory period and just take a step back, look at it, and just say, oh, actually, it's not as bad as what we're hearing, what we're seeing. So.
And to that end, and from a planner's perspective, because we are definitely a planning first approach. We apply a planning first approach. I think consistently reminding clients that it's so important for us to look at the long-term planning goals and look at these small events and say, okay, did it impact your long-term goals? Did the fact that we were down, 10% on the S&P for a period of time, or 13%, whatever it was, did it really impact the goal that you've got, or the goals that you've got 10, 15 years hence? Or if you're already retired, is it changing the way that you live day to day? And refocusing on just maintaining an appropriate investment allocation for long-term goals and goal attainment is our number one job. So
It's certainly not easy from a client's perspective, to see your account value go down, right? We've been very fortunate these last couple of years with what we would consider outsized market returns, unnatural market returns, right? But we're thankful for this. And we also recognize that that doesn't make seeing account values go down any easier, even looking back on that. So just, keeping that in mind, that's part of why we wanted to have this chat and just be very candid and upfront, and hopefully mention, I don't know, Anthony, if you wanted to mention the consumer debt to spend ratio that we were looking at, but there are some really positive underlying elements to what we see in the economy right now that continue to back up the hope that long term, despite the chaos, things are going to work out.
yeah, the thing that you're speaking of is, I think there were three things that came out of a presentation that we viewed with a partner that helps us with our portfolios, and that's that the health of the consumer at this point in time is very good, and that could provide a tailwind to offset tariffs. The other piece was the impact of AI, and this is not going away. Artificial intelligence and the investment in it is not going away, and we're invested in it. You're invested in it. And then the other thing is that with the dollar weakening, the international piece, especially developed international, can provide some buoying effect to client portfolios, which is why we're doing a slight increase to the developed international and the strategies. So again, as Christopher pointed out earlier, we want to focus on the things we can control. We certainly can't control policy. Coming out of DC, we can't control global events. We can't control what happens in the markets, but we definitely can control some things that are in your portfolios and the direction. And so, I think that's the big message today. I think finally, to anybody who's unnerved about what's happening, that we're always here, and we'll take your calls, we'll answer your emails. Feel free to reach out if you want to have one-on-one conversation with any of us, and we're happy to take the time to do that with you. So, all right, guys, I think this was a good thing to do for everybody, and we appreciate anybody who listened to this.
More to come.
Thanks,
More to
everyone.
come. Yeah.